overnight, one we're watching very closely. So they hit their highest level since November 2014, ahead of US sanctions kicking in, as I mentioned, next month. For reaction to this, I'm joined by Markus Helsing from JB Markets. Markus, great to have your company on the program. I wonder, how high can the oil price go from here? And this is a question we've been asking for many months, but it continues to push ahead, now sitting at 4-year highs for Brent.
Well, thanks for having me on the show, Ingrid. Look, it's been a lonely battle being bullish on oil in December last year, $50 a barrel on West Texas Intermediate. But look, here we are at 73.5. Obviously, Brent is well above 80. Look, to us, really, this is sort of the expected sort of scenario unfolding. When you look at the actual demand side of oil, it is just massive. And you add on a few on the supply side related issues that we all know, and you got yourself a beautiful bull market. So we really believe this has more to go. $80 was our minimum target early this year. It still is. We wouldn't be surprised to see it overshoot up to $100 a barrel.
Right, so you're one of those, because we've talked to quite a few that say that they don't think it can get to 100, but then you've got the flip side saying that, yeah, oil will get to $100 and then maybe come off from that level. What will drive it to that level, though, Markus? I mean, yes, we've got the sanctions coming in, which I imagine would be priced in by now. What are you watching to sort of give it that next leg up?
Well, again, I mean, a market, in particular a commodity market, at some point has a self-driving force. You have the speculators jump on board, investors per se. But again, I've always pointed out that the demand side of the equation has not been really focused on as much as they should have been. And that, to me, is a massive driving force. So you have strong, rising, stable demand. I mean, it's perfect for any market, but in oil in particular. And you have supply-side related issues all over the place, and they're building up as we talk. So look, really, we believe this is just now the culmination of the multi-year bull market or recovery in oil prices. $80, $100, does it really matter? Normally the markets do overshoot, so hence $100 a barrel is easily possible if things get a bit excited.
What do you watch when it comes to OPEC? Because obviously we saw some sharp gains after the last OPEC meeting, but what can OPEC do from here, or what do you expect OPEC's next move to be?
That's a very good question. I mean, we still have this Aramco IPO sort of in the background coming up at some point next year, apparently. It might be delayed again. But look, but basically, to me, that the production limits of OPEC has helped, with the help of Russia as well. So they've actually been successful because they've studied their demand side of the story, and that's come to the party. So I wouldn't be surprised to see at some point, especially if we see above $80 a barrel levels, supply side, and the OPEC to open the old tap a bit. But up till then, I think they're quite keen to, and they would love the stability of this higher oil price. And God knows, even Saudi Arabia has a deficit nowadays. They do need every dollar income they can get. So I think they won't be in a rush, but I think OPEC at some point will have to open the tap a bit.
Markus, what else are you watching when you look at broader energy? I know US natural gas has been in your sights. Do you think this one's overvalued?
Look, it's been I mean, the US has been flush with the stuff, and we just studied it now for quite some time, over the last 3-4 years, and we really feel that natural gas now is ready to catch a bit of fire and actually, get a bit of the bullish tone that we see in the likes of crude oil. But look, it's just now the market has been very, very balanced at very low price levels. We find natural gas in the US extremely undervalued, an extreme fair value buy. We are long natural gas ourselves and clients of ours. So we just think it is a very low risk investment in our view, and potentially highly rewarding.
What else are you watching when it comes to, more broadly, to energy and even other commodities as well, in light of trade wars? And we talk about trade wars today. A new NAFTA deal, US, Canada, Mexico agreement at least, being signed. Still the US-China trade wars, though, very much in focus as a global issue. Has this been impacting, or do you expect this to impact commodities, and which ones are you watching?
Well, first and foremost, I want to say that this whole name trade war started with US journalists and was carried around the world. They always like to have a war on something. I reckon we're very far away from a trade war at this point. In a moment, this is really just a tit for tat, check each other out and all that. If it even gets to a trade war, we'll find out probably this time next year. But really, as far as commodity prices are concerned at the moment, they haven't really shown any impact of that at all. As a matter of fact, if you look at iron ore prices, which impact Australia in a big way, and related coal prices, we are trading at $68 a tonne in iron ore, and coal prices are holding up beautifully, of course, with the underlying broad-based energy price recovery. So really, this is a godsend for Australia, for our terms of trade. This is an absolute godsend, let alone the budget, of course, which Morrison mentioned not that long ago. But it's quite obvious. So, I mean, we might have another 3-6 months at least in the sun. Whatever happens after that, we'll have a look then. But really, that brings me to the Aussie dollar, which we believe has run out of puff in the bear market, in particular on the crosses against the Swiss franc, euro and yen. I think the Aussie dollar here, in our view, is a strong buy. It might just turn out to be a 3-4 cent bounce. But on a bigger picture, we're coming down now for quite some time. So really, that's some really good news regarding Australia. I mean, anyone who travelled overseas lately with the Australian dollar as a base currency suffered greatly, inclusive myself. And I reckon there'll be some welcome moves coming in the Aussie dollar on the north.
How surprised you have that view on the Aussie? Because, I mean, most analysts, most economists we talk to see downside risk for the Aussie going forward, particularly given the interest rate differential with the US and watching that US dollar continue to rise off the back of interest rate hikes and their tightening cycle there. Is it just commodity prices that give you that sort of positive view on the Aussie dollar? And is it short-lived, or do you see this as more of a medium-term view?
Look, in the moment, it's a probably short, medium-term view. I don't want to get too carried away yet. We just feel overall the Aussie dollar found a lot of support at the price levels in August. And actually, in some of the cross rates, like Aussie Swiss, Aussie yen, actually reversed. And on a monthly basis. But look, I think when you hear this sort of interest rate differential talk, well, what we're talking about is 0.5%. I mean, if you look at the impact on a currency on terms of trade, that's a much more substantial impact on a currency than simply an interest rate differential of 0.5%, which is nothing. I mean, in the 80s and 90s, you had interest rate differentials in the 3-5% mark. So I mean, like, I think this is trumped up too high. I'm not yet convinced the Aussie dollar is ready to go back to parity, but I think the Aussie dollar has a very fair chance to rally back to 75 to 76 cents by Christmas.
All right, finally, gold and silver. I know you always keep a close eye on these markets. Gold's interesting because we talk about it as a safe haven, but it's not really these days. How are you viewing gold and silver and the trajectory there?
Well, I think any product or any commodity is not a safe haven when it goes the wrong way. But now look, if you look at the silver-gold ratio, it hit a record or a near record at 85 only a month ago, major reversal over the last few weeks. Now, this is a ratio, if someone cares to really look closely at that, has always been, without any exception over the last 30, 40, 50 years, has been a very early warning indicators that precious metals might have to be looked at on the buy side. Now, if gold bottoms out at $1,100 or $1,200 over the next 3-6 months, who knows? We find that silver in particular has really has shown really what we sort of expected early last month. It had found a bottom. Bottom line is we find the precious metals, the bear market since 2011, in our view, is in this very final stage. We might have already seen, and that's again probably a bit too early to say, but it feels to us that we might have seen the end of this 7-year bear market.
All right, Markus, always interesting stuff. Thank you so much for joining us today.
Thanks, Ingrid.
Markus Helsing there from JB Markets. In the meantime, as we flagged before, the former Prime